Well, for a deeper look at the future of Starbucks, I'm joined by Asit Sharma. He's the Senior Consumer Goods and Industrials Analyst at Motley. Welcome to the show.
Thanks, Rachelle. Good to be here.
Now, Starbucks is a company that likes to try new things, and when they don't work, they quickly switch gears. That's usually something that you see with startups. So why would a company the size of Starbucks use this failing fast approach?
Well, Starbucks is in its own DNA an innovator. So what often is them just trying to change up product and test new ideas looks like just trying to fail fast. And this isn't the case with Starbucks as of late. They've really built their market share by technological innovation on the digital side and also product innovation on the marketing side and absolutely with the coffee. So to me, when I look at Starbucks and how it evolves its product, it's really part of a very methodical type of innovation, and it's not just flinging new ideas out at a board and seeing if they'll stick.
Now, let's look at some of Starbucks' most recent decisions. You know that they opened bakeries and evening bars and they closed them. And you also had some of its missteps in terms of some of the social positions that it took. Some say it's a sign that the brand may be losing its way. What are your thoughts?
Starbucks has always been a company that has a social consciousness, and that's not something that they're going to abandon. I think that's something that outgoing CEO Howard Schultz is personally very vested in. So for Starbucks, it's just a case of merging up that financial equation, which they've been extremely successful with, and their social consciousness. They want both to coexist, and they want to be successful at both. So I don't think they're losing their way so much as people misunderstand that this isn't a company that's only about profit. It's a company that's about investing its returns to push forward initiatives that it believes in.
And it's certainly investing those worldwide. We know that there's a wide variation when it comes to the cost of Starbucks products. In fact, a latte will cost you nearly $7 in Zurich, $4.60 in Beijing, and just $1.49 in Rio. So let's start with a look at Starbucks in China. You have this country with a growing middle class. How likely are Chinese consumers to choose, say, this trendy brand over some of their traditional or local brands?
It's a great question, Rachelle. We've seen with many Western brands that they have a curve in which they gain a lot of momentum, and then once Chinese customers become used to them, they trail off as local brands come and take market share. That hasn't been the case as much with Starbucks. It's had a long history in China, and it really understands the market and has gone out of its way to present itself as a company which understands the culture in China. So I believe that Chinese customers think of Starbucks as being a different sort of company, and they identify with that ethos that Starbucks puts forward. So for them, yes, they are at some risk always of local brands coming in, but so far, so good. They're enjoying much resonance with the Chinese consumer.
Now, obviously, that cup is iconic. It could be seen anywhere around the world. And they're also trying their luck in India. Now, India is the second largest tea producer in the world after China. So when you hear about Starbucks expanding its Teavana brand to India, why would Indian consumers buy tea from a chain?
Well, Indian consumers are very much like their Chinese counterparts in that you have a growing middle class with a lot of disposable income. And just like you and me, they like a nice experience. And while Indians are rabid tea drinkers, it doesn't mean that they won't entertain going to a company like Starbucks and going out for an occasion and testing a new type of tea, which might not be the type of Darjeeling tea or Assam tea, which is very popular in India. So I think that Starbucks has an opportunity there with the Indian consumer. They've done very well in China with putting almost a premium experience halo around their product. And I think they can replicate that in India, especially on tea occasions.
Now, Asit, we know that Starbucks CEO Howard Schultz is stepping down to focus on some of these higher-end shops. And we mentioned some of the challenges. You have sluggish growth, the rising price of coffee beans, a potential minimum wage hike. What does this leadership change mean for the company's future?
Sure. Well, you have to remember that Howard Schultz has built an extremely stable operation, and the incoming CEO, Kevin Johnson, is the company's chief operating officer. He's an operations guy. So he will take over and keep things very steady. On an execution basis, Starbucks is really second to none. They've shown a lot of companies how to merge a supply chain with a digital operation, and how you make customers more loyal through your operations. So that is a very solid piece of their economic puzzle. What I worry about more than the operations side is the vision that Howard Schultz brought to the company. Someone has to step up and take over that vision. That's always the CEO. So we're going to wait and see how Kevin Johnson does as a visionary. China's a great example. Howard Schultz took a bet more than 20 years ago that this would be a market that would be very crucial to Starbucks' growth. And here we are today, 2017. Starbucks wants to double its store count of 2,500 stores to over 5,000 by 2021 and almost triple revenues. It took Howard Schultz's foresight a long time ago to reach this liftoff phase. So we are going to watch on Wall Street and also investors, Motley Fool investors who are longer-term retail investors. We're going to watch to see how the new CEO handles the vision piece.
Certainly big shoes to fill. Thank you so much, Asit Sharma, Senior Consumer Goods and Industrials Analyst at Motley Fool.